Attention everyone, this is breaking news. Brace yourselves as it seems that we're on the brink of an economic disaster. The Federal Reserve Chairman Jerome Powell appears to be hell-bent on annihilating all of us. In a very highly charged and intense congressional hearing, Jerome Powell faced an onslaught of questions about his recent policy decisions. Senator Elizabeth Warren pulled no punches as she interrogated him on how his proposed interest rate hikes would be devastating to the American people. The tension in the room was palpable, and Jerome Powell revealed that his actions would result in the loss of 2 million jobs, leaving families across the nation in financial ruin. This is a dire situation, and we can only hope that our leaders can find a solution to prevent impending catastrophe. Check this out.
Well, I want to take a look at where you're headed. In December, the Fed released its projections on the state of the economy under your monetary policy plan. According to the Fed's own report, if you continue raising interest rates as you plan, unemployment will be 4.6% by the end of the year, more than a full point higher than it is today. Chair Powell, if you hit your projections, do you know how many people who are currently working, going about their lives, will lose their jobs?
I don't have that number in front of me. I will say it's not an intended consequence.
But it is, and it's in your report, and that would be about 2 million people who would lose their jobs, people who are working right now, making their mortgages. So, Chair Powell, if you could speak directly to the 2 million hardworking people who have decent jobs today, who you're planning to get fired over the next year, what would you say to them? How would you explain your view that they need to lose their jobs?
I would explain to people more broadly that inflation is extremely high, and it's hurting the working people of this country badly. All of them, not just 2 million of them, but all of them are suffering under high inflation, and we are taking the only measures we have to bring inflation down.
And putting 2 million people out of work is just part of the cost, and they just have to bear it?
So what would you guys tell Jerome Powell if you were to run into him today? Drop me a quick comment down below. Now hold on to your seats, guys, as we are facing a financial doomsday. The Federal Reserve Chairman Jerome Powell has just dropped a bombshell during a very important meeting that could have far-reaching consequences for all of us. In a very shocking announcement, Jerome Powell warned that interest rates could skyrocket to unprecedented levels at lightning speeds, and they could stay there for an extended period of time. Very, very contrary to what everyone initially expected. So brace yourselves for the worst, guys. People who bought homes hoping to refinance in the near future, that concept may be long gone. And this means skyrocketing payments on your credit cards, car loans, mortgages. The so-called transitory inflation is now a distant memory, and we could likely expect a transitory recession to soon follow. The implications of this announcement cannot be overstated, as it will affect all financial markets, from the stock market to the housing market. The very foundation of our economy is in jeopardy right now, and we have to prepare for the worst, but always hope for the best. Now, an unsuspecting university student was just recently caught up in a very staggering credit card scam that left authorities reeling in shock. This individual, accused of brazenly stealing over $500,000, used the money to indulge in lavish and extravagant purchases of high-end items, thinking that she got away with it. But justice caught up with her after a fatal error that led investigators to crack the case wide the heck open. This shocking revelation has sent shockwaves across the nation, raising questions about the security of our financial systems and the vulnerability of unsuspecting individuals. Stay tuned for more updates on this one, because you're going to want to hear about this one.
Greed took over. I don't know how else you would classify it.
Police say 19-year-old Ariel Foster embezzled hundreds of thousands of dollars from her part-time job. Arrested Wednesday night in front of her dorm room at LaSalle University, where she ran track. The teenager, accused of shaking down this Lovisa at the Burlington Mall. The jewelry store lists most of their items for under $50. Burlington police say Foster was doing fake transactions, marking items up in price, then returning them for the original price while pocketing the difference in account of her own. Customers were never involved. She acted alone. Police say for 3 weeks in February, Foster made 8 fake transactions totaling more than $540,000.
When I first saw the amount, I was surprised. I thought it was a mistake.
Police say over the course of those 3 weeks, Foster spent $5,000 on a Louis Vuitton purse, $6,000 on plane plane tickets and $20,000 for a hotel in Maui. Her shopping spree ended with the purchase of a Tesla for $35,000. Here it is, now in the custody of Burlington police. Police tell me Foster got loose with her work and rang up an order for $1 million, but never cleared it out. A coworker saw the amount and then notified them. LaSalle University tells us they are cooperating with police, saying the responsibility of all students to comply with local, state, and federal laws applies both on and off campus.
Clearly, we all have to be extra careful nowadays to avoid being scammed out of our hard-earned money and our identity. And speaking of being scammed, did you guys know that pretty much anyone can find anything on the internet, including your full legal name, your personal email, your home address, phone number, even your relatives? I was curious for myself, so I jumped on Google my best friend's name, and sure enough, I found out all sorts of information about him. I sent him some screenshots. He freaked out. Now, this information is accessible because of data brokers. These people, these companies, they profit by wholesaling your information to robocallers, telemarketers, spammers, and pretty much anyone else who wants to learn more about you. And that's why I'm so excited to tell you guys about today's sponsor, Aura. So Aura will identify data brokers that are exposing your information and automatically submit opt-out requests on your behalf. They'll even opt you out of junk mail and telemarketing lists. You can use my link in the description down below this video, aura.com/Ron Yates, to try 2 weeks for free and see how many data brokers are sharing you and your family's information. Also linked in my description, or scan the QR code. Aura also monitors your emails and your passwords to see if they were involved in a data breach and exposed to the dark web, and gives you recommendations on what to do. Aura's app also features a VPN, password manager, real-time credit and identity theft monitoring, internet parental controls, and it protects your devices from malware. Aura has almost every internet safety tool that you will ever need, all in one app. So let Aura do all the hard work of keeping you safe online. Now, if you sign up right now, Aura will give you a free 2-week trial with my link. You'll be shocked at how much of your personal information Aura finds exposed over the next 2 weeks. So go to aura.com/Ron Yates and start your free 2-week trial today. Also linked in the description down below, or you could scan the QR code. Now, you know me, guys, I'm a realist, and that's why I always keep our financial freedom fam in mind and pretty much do our best to keep our channel fact-based and realistic, at least as much as possible. Now, with that said, here's a summary of Jerome Powell talking about interest rate hikes and how they're likely to go higher, faster, and longer.
It says the January data partly reversed the softening trends they'd seen late last year. This likely reflects, he said, unseasonably warm weather, but he suggests that even if you take out the warm weather, it still suggests inflation is running higher than expected. On inflation, Powell says the process of reducing it has a long way to go and is likely to be bumpy. More on inflation, he says it's moderated somewhat, but still well above target. He expects housing inflation to decline in the year ahead, but there's little sign of disinflation in the area that he continues to point out, which is core services ex housing. On the economy, Powell says there will likely be a softening in the labor market this year. While wage gains have slowed, Powell says they have remained above levels consistent with the Fed's 2% inflation target. The U.S. economy slowed significantly last year, and as for consumer spending, it is rising this quarter at what he calls a solid pace. There's been some recent indicators that point to subdued growth in spending and production, but overall, he says, the labor market remains extremely tight. So there it is, guys, the possibility of a higher rate, the possibility of getting there faster, and the idea of staying there for a long time. Back to you.
Powell's exact words, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rate hikes is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes, end quote. Like you heard, Jerome Powell's already laying the groundwork for more interest rate hikes in the very near future. But what's worse? This whole thing is probably going to happen a whole lot faster and a lot longer than previously anticipated. Before, officials were pegging the Fed rate to top out somewhere around 5.1%. But now, investors and Wall Street analysts are saying that it's probably going to land somewhere in the range of 5.5, maybe 5.75%. And that's a pretty big deal, guys. Now, more on the effects of that later. But Jerome Powell did say, quote, "We have covered a lot of ground, and the full effect of our tightening so far are yet to be felt. Even so, we have more work to do," end quote. Plus, he also said that the road there could be bumpy. All I want to say is, bumpy for whom? I mean, is Jerome Powell and his family really going to be feeling the bumps in the road here? I highly doubt it. But what about you guys? Now, I said last year I really couldn't see the pivot being fully executed until early 2024. I'm even more convinced that this will be the case now. So what does this all mean for you, for me, for our cash flow, right? Well, as always, it wouldn't hurt to add on to your income streams. Those with credit card debts should absolutely brace for more interest rate shock in the coming months, especially since credit cards have variable interest rates that go up when the Fed raises their rates. Even now, average credit card rates are at an all-time high of 19.93%. By comparison, the average credit card interest rate stood at around 16.3% at the outset of 2022. Now, if you're carrying that credit card balance from month to month, which a lot of people are, it may be a very good idea to consider transferring your balance to a lower interest rate option, such as a 0% interest balance transfer credit card. Mortgage rates are also staying hot. Now, while mortgage rates don't exactly follow the Fed funds rate exactly, they are definitely expected to be impacted downstream by the central bank's policy. Each time the Fed raises the bench rate mark, variable home loan rates, they tend to move in tandem. And so this means that anybody who's shopping for a new home in 2023 should expect a smaller house and probably bigger payments. Now, those looking to finance a car, they should also plan to shell out a whole lot more money. And watch out for those adjustable rate mortgages that a lot of these mortgage companies are trying to sucker people into. Now, the Fed's rate hikes will increase interest rate costs for new loans on cars as well. Now, last I checked, auto loan rates were around 6.1, 6.2% rate for a 5-year new car loan. Now, this is up from 3.96% at the beginning of 2022. But hey, if you got some money in the bank, make sure you're making the most of those higher interest rates on your savings bank accounts. I recently did a video on online banks and certificates of deposits that are offering interest rates that are higher than 5% that are also FDIC. Make sure your bank is FDIC, especially in this banking climate that we're dealing with right now. We're going to need as much financial preparation as possible. Pretty soon, those Fed rate hikes, they're going to impact the job market, and that is probably going to mean layoffs, maybe even bankruptcy for a lot of Americans. Companies that were considering expanding their workforce, or they're going to do a double take in this economy. New opportunities made possible by low interest rates are no longer on the table. That has implications for more than just businesses. Individuals seeing new opportunities vanish might start to feel insecure about their own job positions. Instead of job hopping to a new company, they might just stay put. Democratic Senator Elizabeth Warren asked Jerome Powell to address the 2 million people who the Fed predicts would lose their jobs if unemployment rates increase to the Fed's projected 4.6% by the end of the year. Now, you heard what she said in the clip. What would you say to them? How would you explain your view that they need to lose their jobs? But it didn't end there. Elizabeth Warren warned that the Fed has a terrible track record of containing modest increases in the unemployment rate. Now, once the economy starts shedding jobs, and she said it's kind of like a runaway train. Definitely don't want to hear that when it comes to working class Americans losing their jobs. I mean, am I right? We have mortgages to pay, kids' mouths to feed. Elizabeth Warren concluded her line of questioning by telling Jerome Powell that he is gambling with American people's lives. She said that we need a Fed that will fight for families. Finally, somebody making sense out there. I mean, no matter how many times Jerome Powell and these lawmakers, they try to push the truth down our throats, it just never made sense to me that for inflation to go down, we have to lose jobs. I mean, like, inflation is a balance of supply and demand. Has anyone ever thought of increasing supply? And here's the other side of the coin. Corporate greed. Corporations raise prices for no good reason, blame it on inflation, increase profit margins, and so it's almost like we have fake inflation. Losing jobs is not going to fix that. But right now, job openings, they're still at a record high, but they have cooled a bit since the Fed started tightening the borrowing costs. The unemployment rate is still at a near half-century low. But the question is, how much longer could that last? We've got big tech firms, Meta and Twitter, having laid off thousands of workers. Others, such as Apple, they are freezing hiring. Economists are seeing that the unemployment rate's climbing more than a full percentage point by December of 2023, and they're expecting unemployment to hit 4.6% from its current half-century low of 3.5%. Sometimes a booming labor market can also contribute to inflation. When there's a mismatch between labor demand and supply, companies can often boost wages to recruit more workers. And the real problem is that the raising of the interest rates is what you could call a blunt instrument with no method of fine-tuning specific corners of the economy. It simply works by slowing demand overall, but the risk is that the US central banks could do too much. Put into the mix that the officials are trying to judge how rates impact the economy with backward-looking data, and you could definitely have a runaway train headed toward a recession cliff. Now, just to give you the facts, 8 of the Fed's past 9 tightening cycles have ended in a recession. That's not a good pattern. Now, there's a common mantra when it comes to the Fed: don't fight it. Most of the time, it means that investors should adjust their decisions along with how the Fed's tweaking their monetary policy. Right after Jerome Powell's remarks in the Senate Banking Committee hearing, U.S. stocks fell sharply as the news sent investors reeling, with all three major indexes dropping steeply: S&P 500, NASDAQ, and the Dow Jones. Market expectations for a half-point rate hike spiked, shifting from a 30% probability to a 70% probability by the end of the day. Now, in corporate news, bank shares fell as investors worried that higher interest rates would lead to a recession. JP Morgan Chase shares dropped by nearly 3%. Bank of America stocks shed 3.2%, and Wells Fargo Bank, they fell 4.7%. Pretty soon, it's probably going to look like a fire sale in the stock market. Something to consider if you're looking for the next great buying opportunity. You could wait. Some are saying that you don't fight high inflation with 0.25% increases, that the economy needs a shock in order to return to a sustainable inflation rate. And by shock, they mean a 1% increase in the prime rate this month, or otherwise, inflation will continue for years. Now, that's definitely going to turn some heads in the markets. Now, a good way to prepare for more interest rates to come is to do an audit of your credit cards. It's actually simpler than it sounds. Basically, you just need to answer when you should downgrade your credit card versus when you should just cancel it altogether. But let me help you out with some guidelines. So for credit cards with no annual fee, the answer may be very simple. Don't do anything. Stick the card in the drawer and forget about it. Now, at best, you might find a way to use it down the line. At worst, the issuer might cancel it if you don't use it for too long, and well, you just save yourself a phone call. Just make sure to check it every now and then for fraud or any other anomalies. Or if you've already signed up for Aura, you're probably good to go. Now, what about those credit cards that aren't giving you your money's worth when it comes to those annual fees? Now, in this case, you got two options: cancel or downgrade the credit card. Now, downgrading a credit card is when you switch it out for a card that's in the same family, but it has a lower annual fee. Now, there's definitely a few cases when it can be worth downgrading instead of canceling. Now, the most common reason that people downgrade a credit card instead of canceling it is to hang on to their credit line. When you downgrade a credit card, you're changing the product type, but it usually keeps the same credit limit. That can be very good for your credit score. If you want to downgrade but still keep your credit line, then you may be able to transfer it to another credit card from the same issuer. Not all credit card companies are going to do this, but it's definitely worth a phone call just to see if it's an option for you. Now, another reason to downgrade your unsecured credit card is that if the less expensive credit card product offers some of the same rewards or perks. So this can let you still enjoy a rewards card, but without the high fees. So, for example, let's just say you're paying $95 a year for a credit card that earns 4% cash back on groceries, but there's a card in the same family that earns 3% cash back and has no annual fee. Then you might not get enough out of the $95 to make it worth the fee, if you know what I mean. But you may still want to earn the grocery rewards. So in this case, downgrading to the no annual fee credit card would be a perfect solution. Now, some credit cards simply don't have downgrade paths. Plus, downgrading a credit card generally won't earn a sign-on bonus. So you might miss out on any and all sign-up bonuses offered by the credit card that you're downgrading to. So you need to decide if foregoing the bonus is worth it if you decide to downgrade. But let me know if you guys want to learn more about maximizing those credit cards and other ways to navigate those interest rates. Our comment section is always wide open for you guys, for your comments, for your questions and requests. And don't forget to protect you and your family today, guys. Don't forget to go to aura.com/Ron Yates and start your free trial, also linked in the description down below. And also you can scan the QR code. But for now, that was your essential U.S. economy update and daily news report. The Fed determined to wipe us out with those interest rates. 2 million jobs on the line with a recession probably on the way. And of course, knowing when to downgrade or cancel your credit card. Appreciate you guys watching. I always want to thank you guys so much for dropping a like for the videos. Please be kind to one another, and I'll see you on the next video.